Okay, it looks like we're live. The title today is This Is It. Currency is about to sink very quickly. Gold and silver set to explode higher. And yes, putting my how can I say, putting on the line here, making a guess, but I think things are getting really interesting out there. And yeah, so as usual, I'm a little early, and I'll greet the people that are here already. And we're going to have Clive as well, of course. He's coming on. He should be here soon. So we've got Endurorama, Dutch Libertarian, Hannah, James Bradford is here, music lover forever, Andrew Watson. Yes, Rudy is here. Uh, he's over there on the sofa as usual. Olivier Leroy, Hyle Silver, Quadman 72, Phil Ward, Jake's Custom Part, XMD, Milky Porridge is here from Eastbourne, Johnny Bandit, Joan Diaz, Rob McElroy, not Rory, but Rob, uh, Cozy Fantuti, Carl Hines. So what's going to be the main driving factor that rockets gold tomorrow? Well, I think as a combination of a lot of things, what's been happening to the physical market in London, that's starting to get people to look at gold closer. A lot of physical gold is flowing to the US, and the I would say the tariff regime, what it will do and already has done, it's made Canada, for example, the Bank of Canada more specifically, cut rates and stop quantitative tightening. And I think a lot of other countries could be on the same path. They will try to debase their currencies as much as possible, and it will be a race to the bottom. And usually, gold and silver benefit from that. But also, I think the whole uncertainty, and I think the markets and investors, they've been caught by surprise. They thought that Trump, uh, the threats of tariffs were just that, but it looks like it isn't. He's serious. James Richter's here, Don Pelosi, sorry, Darren Smith, Euro Drive is in North Korea. Uh, who else is here? Steve Michels or Michaels from Florida, Darren Smith, uh, Pap Higgles. I'm thinking tomorrow is still going to be a buy. And the other thing I would say, I'm not really, I'm going to keep an even keel, even if all this wasn't happening, the tariff war, so to speak. I'd still be very comfortable with having gold. All this could do is trigger actually a spike higher. And usually after a spike, there's a drop back down. That's all I would say. Would I sell on a spike? No, because I hold gold not for trading. Maybe some of the miners if they do really well. LG from Orlando, Alan Satoshi Greenspan, gather gold, stack silver, BYOB. Oh yeah, your own bank. Yeah, Native American, 25% tariff, he says, equal 25% inflation. I actually don't think that's right. Um, Inflation is a monetary phenomenon. This is to do more with trade. Yes, prices are going to rise in the short term, But we're going to look at why I think Donald Trump is doing this. It's not a short-term fix at all. It will be painful in the short term, but in the long term, I think it's the right thing. There's Clive.
Hello, good evening, Mario.
Good evening. How are you?
Yeah, I'm very well, thank you, and good evening to all your viewers.
Yeah, yeah. There's a lot of people here already, I think. Let's see. Uh,
887, I see.
really? Yeah. Wow. That's a lot already. Wow. Usually there's only a couple of hundred by this time. And some people have been asking about gold, Clive, and there's a gold crypto that trades. It's called Pax Gold, and I'll show it to you and the viewers. I'm not saying this is a reliable indication of where gold's going to be, but it's been as high as 2,942. It's now at 2,876. That's spot, of course. And the interesting thing is there's a heavy volume, as you can see, Pax Gold. So a lot of people have been asking Clive why I think gold could do well because in lieu of this the tariff, let's say news. Maybe you want to give your opinion on that and whether you think it will help gold. You might not think it will.
Well, I think in general tariffs are bad for business wherever they're imposed, and this is going to hurt Wall Street. It's going to hurt European stocks. It's going to hurt Asian stocks. So I think for several reasons we're in for a decline in stocks, and as the stocks decline, the money will seek a new home, and the obvious place to go is gold. So I do think gold will be a net beneficiary. I'm sorry to say I think Bitcoin goes down with stocks because it's pretty much in the same camp. By the way, I'm a holder of Bitcoin, but there are times when it's going to go down. I think we're in one of those at the moment. But yeah, I think gold will hold up very nicely, and I think that's where the money will go. And also, we mustn't forget there's going to be this problem with, I suppose, tariffs on gold going into the United States. What's that going to do to the price of gold in the United States? Are we going to have two prices, one in the United States and one everywhere else? What do you think, Mario?
I don't think so. Maybe for a short while, but there's usually arbitrage in gold. Gold flows everywhere. So I think the price outside the United States uh, will also rise because people are going to buy gold. Yeah, no, it's also going to rise. I think they could buy gold in the U.S. Yeah, I mean, but
And we've seen,
if they
sorry,
buy
go.
outside the U.S., they're gonna and try to sell in the U.S. They're gonna get more. So I think it's gonna follow higher. The U.S. is gonna set the price.
Yeah. Just on the sanctions, sorry, the tariffs, I've seen that Justin Trudeau has imposed a 25% retaliatory tax on a huge chunk of American goods coming into Canada.
Yeah, well, that's not surprising. I just wanted to say one thing before we go further. I got an email from Howard at Dirty Men Safe, and he asked me to tell the Canadian viewers that he's not sure what's going to happen tomorrow, but right now they can still get Dirty Men Safe without any tariff. It's not going to be more expensive. So if you are in Canada and you are thinking about buying a Dirty Men Safe, you should do it today. The details are below in the description of this live stream. Just wanted to put that out there for the Canadian viewers. Clive, as per tariffs, I agree with you that in the short term, very few people gain, except governments that get more tariff revenues, and consumers are going to get hurt. And I think Trump actually said that. And let me bring it up here. He made a
Well,
comment.
it'll put up prices, won't it? I mean,
Yeah,
if
in
they
the
have
short term,
tariffs into the United States, things get more expensive because
yeah,
either people have to buy foreign goods and pay the tariff, or they buy American goods, which are produced more expensively.
yeah, I know that. I think in the short term that's true, but I think the reason he's doing this is because he wants to increase domestic production and bring a lot of production to the US. And eventually, the higher prices will attract businesses to produce in the US, and the supply will eventually drive the price lower. I'm not trying to defend him or anything, but I can see why in the short term it's bad. And he's saying the tariff lobby, headed by the globalists and always wrong, Wall Street Journal is working hard to justify countries like Canada, Mexico, China, and too many others to name to continue decades-long ripoff of America with both regard to trade, crime, and poisonous drugs. I mean, I'm not sure they did this on purpose, the other countries. I think the reason why this has happened is this here, Clive. Let me try to bring it. Uh, where is it? I did the screenshot. Where? A lot of things in the scope. Oh, this is the reason why I think he's trying to do this. And this is the current account, U.S. current account. And if you notice, ever since Nixon closed the gold window in the early 70s, U.S. has been basically running a deficit almost every year, current account deficit. And the reason for that, Clive and the viewers, is that under the fiat currency system, and the dollar system, countries have to accumulate dollars in order to trade internationally. So what are they going to try to do? They're going to try to sell as much as to the U.S. to earn dollars, and what that means is that the U.S. is going to be running deficits. The flip side is that Americans will be able to borrow and print and buy cheap things from abroad, and I think this is what Trump wants to end. And as I said, I agree with you. It's going to hurt Wall Street. It's going to hurt the consumer. But in the long term, it's the only way to stop this. And I think gold will become really important again, because if we want to go to a world where countries run pretty much, let's say, balanced budgets, we're going to have to go to gold, because gold is like neutral. So what do you think, Clive?
I think the gold price will go higher this year. I think it will. It's been perform. I think last year did something like 40% in the year, which was quite incredible. And I think that continues. There's lots of reasons why gold should go higher, but I think at the end of the day, people are looking for an alternative now, or will be, because I think we've seen the peak in Nasdaq for a while. Asset allocators are looking at the performance of gold over the last 12 months and saying, "Gosh, I should have had some." They're going to, if you factor in a gold in your portfolio, you will now see that it reduces volatility and improves return. So asset allocators, based on that maths alone, will be starting to add more gold in the portfolios, and I think that will drive gold a lot higher over the next 2, 3, 4, 5 years. I don't know. I don't think it's going to stop going. I think it's just going to keep going for quite a long time. We could well have a decade of rising gold prices.
Yeah, someone's asking where I think the price of gold is going to be at the end of this year. I don't know, but it's not really relevant, the price of gold in the dying currency or in the dying fiat currency. And it's not just the dollar. Someone's also saying, LG is saying he also dislikes China's manipulation of its currency exchange rates. And he says, which is true. I don't quite agree with that, because if anything, the Chinese yuan over the last 10, 15 years hasn't really moved that much. And there are a lot of other countries like Japan who manipulate their currencies even more. I think that's just a political thing about China. Um, you could argue the UK manipulates its currency. The pound used to be above 2 back in 2007, and now we're at 1.2. It's depreciated a lot more than the yuan.
I mean, I think China's got two choices going forward with these tariffs. Either they impose some retaliatory tariffs, or they allow the yuan to decline, so that so that people in China still have jobs and they can export stuff to America, and America can buy their goods at the same price as before. So letting the yuan decline would be probably a good solution for China at this point.
Mm. Yeah, no, I agree. Someone's asking Mario or Wolfgang Wust, do you think Brent Johnson's dollar milkshake theory is still valid? Not really. I mean, Brent Johnson seems to think that the fiat dollar is the place to be. I guess he does say that the dollar will go up and then will collapse as well. I'm not sure if he doesn't seem to think that gold is that important. So I don't really follow him that much. The milkshake theory, I don't think it's that relevant. And Clive, talking about one thing that talking about Brent Johnson, he's always poo-pooed the BRICS and like the multipolar world, right? Because there's over the last few years, I've been covering here on this channel and other people as well, how the BRICS are challenging the dollar system and the US dollar as the major power. And I was very surprised by what Marco Rubio, the Secretary of State, said, and we'll play this, Clive, so we can listen to it.
I think we
I
spent
think it's quite significant what he said. Just have a listen and tell me what you think.
I think we spent a lot of time in American politics debating tactics, like what we're going to do, who we're going to sanction, letter we're going to send, or whatever. I think it really has to start with strategy. What is the strategic objective? What's the purpose, the mission? And I think the mission of American foreign policy, and this may sound sort of obvious, but I think it's been lost. The interest of American foreign policy is to further the national interest of the United States of America, right? I mean, well, and that's the way the world has always worked. The way the world has always worked is that the Chinese will do what's in the best interest of China, the Russians will do what's in the best interest of Russia, the Chileans are going to do what's in the best interest of Chile, and the United States needs to do what's in the best interest of the United States. Where our interests align, that's where you have partnerships and alliances. Where our differences are not aligned, that is where the job of diplomacy is to prevent conflict while still furthering our national interest and understanding they're going to further theirs. And that's been lost. And I think that was lost at the end of the Cold War because we were the only power in the world. And so we assumed this responsibility of sort of becoming the global government in many cases, trying to solve every problem. And there are terrible things happening in the world. There are. And then there are things that are terrible that impact our national interest directly. And we need to prioritize those again. So it's not normal for the world to simply have a unipolar power. That was an anomaly. It was the product of the end of the Cold War. But eventually you were going to reach back to a point where you had a multipolar world.
I'll stop it right here. I think, Clive, this is one of the most significant comments that we've seen here. It's really a game changer, and it means that I think despite all the aggressive talk and stuff by the administration, by Trump, I think they're going to have to sit down with China, especially, and also maybe Russia, and work out some kind of monetary agreement. And I think gold is going to be a big part of it. And we saw, I've spoken about this many times. We saw, for example, the Secretary of the Treasury before Trump was even elected back in early November, that he did an interview and he said he thinks there's going to be a Bretton Woods-like realignment, which is basically that.
Well, I think we're overdue for that. I mean, we're seeing that the currencies of the world are all going down together. I think that was the title of your live stream tonight. What's it? Currencies about to sink very quickly, gold and silver set to explode higher. Well, yes, I think that's what we're seeing. We've seen last week the gold price in every currency at a record, which means every currency was at an all-time low. And I think there's more of that to come. I mean, it's been the general trend for ever since the Bretton Woods Agreement fell apart in 1970, well, effectively in 1971 when they abandoned the gold standard. And have been declining versus real money, gold, ever since then. And I think that's definitely set to continue.
Yeah, that's the title of this live stream, that the currencies are going to accelerate now. And I'll tell you why I think that, Clive, and the viewers. It's because of the technical picture. And here I've got the first of the major fiat currencies. It's the Aussie dollar. And was only able to get back to 1980, but you can see that we broke out of this rising wedge, which is usually bearish. But we broke out here back in 2020, tested the line again, and now it's broken out and it's taking off. This is like, if you look back to 1980, I don't think we've ever seen a period like this, and that's why I think this is it. And then let's look at the this is the Canadian dollar as well, and I expect that to continue to rise. And this is a quarterly chart, so we are going to have very short, short-term moves up and down, but longer term, I think the way is lower for currencies and higher for gold. Look at the yen. I mean, the yen uh, broke out this kind of, it's almost like a, how can I say, a teacup formation back in 2020 or thereabouts, and it's really taking off. And that's despite the fact, Clive, that the Bank of Japan has been raising rates. So even, uh, yeah, that shows me that the market doesn't rate the fiat currencies. This is the British pound.
Hmm.
So same kind of scenario. And the same thing with the dollar. The dollar is just starting to break out. So maybe, yeah, Brent Johnson said, yeah, the dollar milkshake theory. Yes, the dollar will outperform a bit the other fiat currencies because the dollar, uh, as you know, Clive, was the major currency after World War II, and it was the one that was backed the gold by gold. So all other currencies are derivative of the dollar, but it doesn't mean to say that you need to stay in the dollar because that's going to go as well. So what else have I got here? Oh, here I've got something that I posted last year on Instagram about the Brazilian real and gold. And the reason I did that, Clive, is that I grew up in Brazil, and if you have savings in Brazil, you put it in dollars. And I said here, Brazilians generally rely on the dollar as a financial safe haven. I think this time they need to dig deeper and get gold. And lo and behold, look where we are. You know, the price of gold in Brazilian reais. So dollarizing is not the solution. I saw I'm gonna stop here. I saw Clive Steve Hanke, who was a pretty respected economist from Johns Hopkins. He said Argentina should dollarize, but I think why not goldarize?
Yeah, that's what I'd do.
Yeah,
What's the point in going into Argentina's had a currency which has been going down for yonks and yonks and yonks.
yeah.
Why would they possibly, having now solved the problem, at least temporarily, why would they suddenly want to go into another currency which is going downhill?
I'm glad you agree with me on that. So someone said here that you were subdued, Clive.
Well,
To-
no, I'm here. I'm here.
Good, good.
Um, yes.
Let's see. Let's see if there's some questions. Rob, Mario, is England holding gold outflows because their best friend, the US, is going to sell paper gold for Bitcoin and acting like they sold it to England? I don't think it's got anything to do with Bitcoin. What's happening is that a lot of gold is flowing to the US. Just saw that JP Morgan just uh, took $4 billion worth of gold from COMEX, and 300 odd tons have gone from London to New York since the election. And what's happening in London, in the Bank of England vaults, which where they hold gold for other nations, they hold gold in allocated accounts. They hold the gold. A lot of the gold there is for ETFs. It looks like they weren't ready for this, and what's happening is uh, that the Americans want more physical gold than the Bank of England can get a hold of, even though they have over 5,000 tons. And why is that? Well, because the London market is supposed to be a paper market. It's not the London market. Well, it's a physical market, but they do virtual trading. So this has rocked the boat, and that's why they've gone from a few days for delivery, usually for spot gold, to 4 to 8 weeks. It's not that. Yeah, and they're having problems. And I saw that the LBMA, which is basically the bullion banks in London, they're talking to COMEX because they have a problem. I don't think it's got anything to do with Bitcoin. I think it's as we saw Marco Rubio said there, it's a multipolar world. And what are the BRICS and other countries doing? They're accumulating gold. And I think America has supposedly 8,300 tons, but they've leased that out many times over. So they're going to have to basically bring back the gold. And I think that's what's happening. What do you think, Clive?
Well, I think the shorts in America, those people who have shorted gold, they've sold gold that they don't own and they've borrowed it. Of course, there comes a time when the future's mature, they've got to repay it. And there's a worry, I think maybe due to the trade wars, the tariffs and things, that they won't be able to lay their hands on gold, at least not at the right price to deliver it in there. So there's a bit of a rush on. Another problem, of course, is this: they've got to deliver this gold if you're a short, and the gold isn't coming fast enough from London. So there's a bit of a panic on. So everyone's saying, oh my God, I better get some here where I can get my hands on it in case I've got to deliver. So I think that's kind of accelerating the thing with the shorts getting involved.
Yeah, I think the biggest short in the world is the U.S. government, and if they're going to back their Treasury trust bonds, or if they're going to have to negotiate with the Chinese, they're going to have gold to sit at the table. So I think all that gold that left Fort Knox over the decades is coming back, but we'll have to see. Eurodrive, thank you for your super chat. 400 Czech korunas, I think that's what you call it. Not sure how much that is. He says, I'm listening while studying English. It's not much money, but have a cup of coffee. Thank you. Any amount is welcome. Thank you very much. Okay, Clive, let's see if we got more questions. Uh, Someone's saying here, I hear Pax Gold was up today as high as 3% from Friday closing. And let's have a look at Pax Gold.
Well, that
Uh,
could be a way of knowing what the gold price is about to do
yeah,
on Monday morning.
yeah, let's bring it up. I don't know if I brought it up already. I might have done it before you came on, Clive, but it's at, can you see it?
I'll make it bigger because it's quite small on my screen. Let's see. Oh, no, I see it. Yes.
2,884. So it's been as high as 2,942. And the volume is quite high. I mean, we're talking millions, not billions.
I mean, is Pax Gold convertible into gold, or is it some
I'm not
generic type of
sure. I'm
gold, do you
not
think?
sure. I'm not sure, really.
Yeah, it's if it's uh,
I guess we're
they
gonna
did
find
have
out.
another type of
Yeah.
there was another type of gold called mirror gold, which was a crypto gold,
Mm,
and that went to, well, it was in this kind of dollars with that Korean guy who went bust, and then when he went bust, of course, all that gold was valued in, I'm going to call it Korean dollars because that wasn't the currency. Was it UST or something like that? And basically, it went to nothing. I didn't own any at the time it happened, but those who held the mirror gold lost all their money.
mm. So, Clive, this is what Trump also said the other day, or yesterday, I think, or Friday. Said, I'm not concerned about market reactions to tariffs. So I think he's trying to get this out of the way as quickly as possible. Yeah, the market might get hurt, but I think he's looking at it more or longer term. Um, so there you go. That's what he
I
thinks.
I just brought up Pax Gold with AI, and it says Pax Gold is an ERC20 token built on the Ethereum blockchain. Each Pax token is backed by one fine troy ounce of 400-ounce gold bars stored in LBNA accredited vaults. Okay, if all that's true, it sounds really good, and it's a
Yeah.
nice way of being able to trade gold 24 hours a day.
LBMA, I mean, that's a bit worrying because we know that they're having a problem there. But anyway, it's probably not, it's probably very similar to what they trade on COMEX and on the LBMA. It's all leveraged, but it gives us, anyway, we're gonna wait just over 2 hours to find out where gold's gonna open. And again, it's not the most important thing. The price, I think, Clive, it's the most important thing is to hold it because we know that they're going to have to um, continue to inflate the system. Um, yeah, and I think with all the debt that we've had in the last 40 years, and what Trump wants to do to bring back manufacturing and make more things in the States, the focus is going to be on real assets, not tech and paper and finance. Is that the way you see it?
Yeah, I mean, on Friday, you remember we talked about, I talked about the top having been seen in the Nasdaq market in the technology sector, and I said the bubble is bursting. I think that's actually what's going on. I think we're going to see, we have very overvalued prices for the tech stocks at the moment. They're coming off. The reason I said it was going to come off was related to the release of DeepSeek. Now, I got a bit of stick from that because people said, "Oh, you're supporting China." Well, I'm not supporting China. The point I'm making about DeepSeek is it's a wake-up call for the AI industry to say that there are going to be a lot more AIs out there coming out of India, coming out of America, coming out of probably Europe, all over the world. So these new AIs are going to arrive. And what DeepSeek shows us is that for the end consumer, i.e., the companies who use AI, they won't have to pay as much as they've been paying at the moment. In fact, in this case, it apparently is free. So if they don't have to pay as much, why would you pay more when you can pay less for what is effectively the same thing? Now, again, I'm not supporting people going to DeepSeek and or supporting China, but the fact is there will be more AIs coming, and that's going to put pressure on the profits of these companies. And all the analysts can see this, so they will be now revising their figures to lower the growth expectations. That doesn't mean to say no growth. There'll still be huge demand for the AI chips. There'll still be lots and lots of growth, but it just won't be as high as they previously expected because the customers collectively won't be paying as much for AI services. So that will have an impact on the people who make the AI chips like NVIDIA. It will have an impact on the data service centers. It will have an impact on the suppliers of the electricity. And it will have an impact on everything which is involved in the infrastructure, including those who are selling the software, the AI software itself. So those growth forecasts come down, therefore equity prices come down.
Yeah, no, I agree with you. I think people uh, get too bogged down on this us versus China thing, and they need to calm down about that. I mean, I watched a YouTube video about this, the biggest technology conference every year. It's in Las Vegas, and this American guy did a video about it on YouTube. And out of the 4,500 companies that go there, 1,300 were Chinese. And he interviewed a Chinese woman there, and she said, "We want to do business with the U.S. We admire the U.S. We just want to do business." And I think sometimes people get a little bit too yeah, too much into this us versus them. I wanted to show the viewers, Clive. Don't know if you've heard of Alex Jones,
Nope.
Infowars. I'm sure many. So this story about the Bank of England gold. I think I was one of the first ones to see it. I think it was Friday afternoon, and I tweeted it out. And actually, I got a mention on Inf. I didn't get a mention, but Infowars was using my tweet here, as you can see. And so I got a lot of likes for that tweet. Oh, and the other thing, Clive, here. I've got this at home. Unfortunately, it ripped a few years ago, but this is back in 1849. The gold was flowing from California to London. So this is where the gold comes in
Yes.
through, it's the back of the Bank of England. It's not at Threadneedle Street. So
So,
any
Mario, here's a question. What do you do if you hear your bank is running out of money?
I try to take my money out as quickly as possible.
Exactly. You're going to be first in the queue. So what's happening with the LBMA?
Yeah, yeah, I know.
So, we've all read in the newspapers now and online that they're running out of gold or they can't deliver it. So anyone who's got any gold there is rushing to get it.
Yeah, especially when the other thing about the LBMA and the vaults at the Bank of England is that a lot of that gold is held for sovereign nations, and they think it. A lot of them hold it so that and they tell the Bank of England, oh yeah, the bullion banks can borrow it because they want to make fees. So to say that the gold that they hold there is all like people can't touch it is wrong. And I think we could see a lot of central banks, maybe the our Reserve Bank of Australia, who's got all its gold in the Bank of England, they could be worried that their gold is gone because
Well,
the reason they keep it there is to lease it to make a bit of maybe 0.5% interest.
well, realistically, a lot of this gold is 3 kilometers underground because they've lent it to gold miners who've then sold it in the market so the gold miners can dig it up. But it's going to take them another 50 odd years to dig it up. So that gold, if you want it, there's only a certain amount you can get your hands on because, like, when you in a bank, they lend most of your money. They can't, if everyone comes running for their money at the same time, you can't all have it because
I
the
don't think,
borrowers can't
yeah,
repay. Same
I
thing
don't.
for the gold miners. They can't repay as it's buried deep underground.
Yeah, I think it's more than just the gold miners that have used it to hedge. It's also a lot of wealthy individuals and funds that have bought gold from like bullion banks, thinking that they actually have the gold. And I'm sorry to say, even if JP Morgan says, "Oh, your gold is allocated," if you ask for delivery, they probably won't have it. Do you remember years ago, 10 years or more? Morgan Stanley supposedly stored silver for clients in New York, and they even charge storage fees. And then some of the clients try to take the silver out, and there's no silver there. So I think the same thing is happening in the LBMA or in the London market because Clive, they run it like a fiat currency system. They run it like the banking system. And now with all the how can I say, instability in the world, a lot of people want to hold gold at home because we got US was sanctioning people. Now the US is putting tariffs. And the world is like what's his name? Marco Rubio said the world is becoming more multipolar and there are going to be different blocks. And look at Venezuela, Clive. They've been trying to take their gold out of the Bank of England, and they haven't given it to them.
Yeah. I mean, a little bit of a funny story. When I first arrived in Switzerland, 50 odd years ago, the bank I worked for at the time, it was my first job in a Swiss bank. I asked to go and see the gold vaults or the vaults where they kept all the gold. And the cashier took me down there, and there were stacks and stacks of gold bars and gold coins. And this was allocated gold which belongs to the client. So I said, well, how do we know? How do you know who it belongs to? How are the records kept? I was trying to understand that. And he said, "Well, you see these little yellow stickers, and every stack of gold had a little yellow sticker on it
Yeah.
saying account 1, 2, 3, 4, account 7, 9, 8, 6." And that's kind of how they. Okay, it's different nowadays, but that's how they kind of kept track of whose gold it was back then. Of course, there was a ledger entry as well in the bank's books that this guy's got 4 kilos of gold or 50 kilos of gold. But to know which gold was his, they put little yellow stickers on the bars.
The posted like the posted.
Yeah, exactly. Post-its.
So this is a WikiLeaks document from 1974. London wholesale gold dealers views on U.S. gold sale and private U.S. ownership, and December 10th. And this date is important because on January 1st, gold became legal again. So they were, you can see here that the Treasury in the U.S. Uh, and they were in contact with the London dealers, Department of Treasury, to ask what was going to happen to the gold market because of gold becoming legal again. So, and I think this is the whole problem now, Clive. And many people don't know this because they haven't looked at it so deeply as you and I have, and some others have. So it says here, to the dealer's expectations will be the formation of a sizable gold futures market, i.e., COMEX. Well, it was the contract because COMEX already existed, but the gold contract, which is GC, was created, right? And it says each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by US citizens. So this is the whole raison d'etre for the COMEX gold futures. It's to keep the public away from physical gold because they don't want you to own real gold. They just want you to speculate and they don't want you hoarding. But my theory is that the US government is bringing back the gold. Maybe there's also some big investors that are in the know. They're bringing back physical gold because the US is going to need gold to renegotiate a new Bretton Woods agreement. So that's why what's happening now on between London and New York is so significant because this is not supposed to be happening. And I think yeah, we're near the end of the price fixing era, and I don't know what the real price of gold is going to be, but I think it's going to be a lot higher, and silver too.
You saw this weekend that I think it was Barclays, their network shut down and people were trying to get their money out and all sorts of things and pay for things and couldn't do so. So, what about all the people who are trying to buy gold coins from the gold dealers and couldn't pay for it?
Yeah, I think 31st of January was the last day to pay your taxes in the UK. So
Yep.
a lot of people leave it to the last minute, and their online service broke down. I paid mine 3 weeks ago. I didn't leave it to the last minute, and I don't bank with Barclays anyway. But like you said, yeah, how are you going to get your gold if you can't do that? But I'm not too sure, Clive, that the general public here is too aware of gold. I mean, it's getting more and more, but I think it's still flying under the radar. We got a super chat from Endurorama. Mario Clive, how long? Thank you anyway, by the way, Andrew. How long before you think the retail gold market will be impacted as the wholesale market? Also curious to hear the community thoughts. So, what do you think, Clive? Because the dealers for retail they're not seeing any shortage, but I think eventually it will seep through. I saw an interview. Um, I think it was the market sniper with someone from Sprott Gold. And he was saying that the demand from their clients are really low, but for some reason, they can't get any physical silver or gold from the Royal Mint in Canada. So I think it's only it could be very soon that the retail market is impacted. Any thoughts, Clive?
Well, the fact that there's everyone's trying to get their hands on physical gold now for whatever reason, it means there is a shortage out there, and the man in the street typically when he starts to read about this tends to say, I'll have mine too." So I think the retail investor will be waking up on Monday morning. I think the retail investor will be going down to the coin shop and seeing if they can get some coins before they run out.
Yeah. LG's asked well, he hasn't asked the question, but his comment is very interesting, Clive. He says, wish Elon would conduct a transparent and open audit of Fort Knox in the New York Fed vaults. I think they do want to do that. And Judy Shelton, who wrote the book Good as Gold, proposing this Treasury trust bond, which would be backed by gold. She's come out after writing a book and said, yes, we need an audit of Fort Knox in order to issue these bonds because people have to trust us, foreigners have to trust us that we have the gold. And I actually think what's going on with a lot of this gold flowing to New York is part of that because the gold in Fort Knox is not there anymore because they lent it out so many times, or maybe the 8,300 tons is not there. Let's say they only have half of it. So they need to bring it all back because they tell the whole world right now that's how much they have. So who knows? I'm just speculating here. And I think the person who would do an audit would be the Secretary of the Treasury, not Elon Musk, who's head of Doge. But yeah, maybe Doge should do it really because it's independent of the Treasury. Uh, and I think that's what they're doing.
If there are people who know for sure whether it's there or not, they're probably bound by the Official Secrets Act or something like that and not allowed to say.
Yeah, I remember in the first Trump administration, the Secretary of the Treasury, Mnuchin, he went to Fort Knox with his wife. Let me try to find a picture here. Mnuchin, uh, Fort Knox. And he took a picture and at Fort Knox, I think he might have, he wasn't even holding a gold bar or Um, let's see, and he said something to the effect, he said the gold, he didn't say the gold is safe, right? The gold in Fort Knox. He said gold is safe. And I thought that was interesting, Clive, the fact that he said gold is safe, not the gold.
Hmm. You got a super chat there from Chris Conman, I see coming in.
All right, let me just clear that. I was just trying to find this. I didn't find it. Thank you, Chris, for your super chat. If gold is repriced to say 30,000 an ounce, it will create a hyperinflation environment. How would a new fiat currency be issued in such an environment? Um,
I think
yeah,
we have two. Uh,
go ahead.
the way, yeah, the way I see it, if this happens, is they'll have two types of currency, and this could take many different forms. You could have, for example, the dollar and the CBDC trading alongside each other. You could have two types of dollars. You could have Russian coupons of dollars. You could have exchange controls. You could have capital controls. So there can be all kinds of ways of splitting the existing dollar into two halves, or two parts, two different things. You could even call cents different. Cents are only worth half as much as they were, or twice as much, depending on which way you look at it. So you remember in Britain effectively we had two values for the British pound back in the 1960s and 1970s. We had what's called the dollar premium. So if you went overseas with your British pounds, well, you weren't allowed to take them overseas anyway for exchange control reasons beyond £50 or something. But if you happen to earn some overseas currency, you could either change it overseas illegally because you had to bring it home, and you'd get more pounds, which you could then bring home, or you could change it in the UK at the official exchange rate, and you'd get less pounds for your money than the free market rate. And I know that because my mother used to work for the United Nations. She was living in England, but she'd go over, get called out for as a stenotypist. She was typing the meetings up, and she would get paid in Swiss franc. Well, she didn't get, she was paid in pounds, but she got an allowance in Swiss francs for meals and things. Uh, so you were supposed to spend all of that allowance or change it at the official exchange rate. That was the rules. But what she would do sometimes is go down to the bank and take her 10 Swiss franc note or 5 franc note or whatever it was and change it into a British £5 note, and pop that in an envelope to her mother and say, uh, dear mum, here's the £5 I owe you. But of course, by changing it in Switzerland, she was getting a lot more pounds for her Swiss francs than if she brought those Swiss francs back to the UK and changed them at the official rate.
Yeah, I personally think what will happen, Chris, is that the this repricing of gold if it happens, and I think it there's a very good chance it will. This Bretton Woods realignment, um, yes, it's going to hurt, of course, people who don't have gold because they're going to be holding the fiat currency. But the way to avoid, I guess, hyperinflation would be that every country in the world, or the biggest countries in the world, China and the EU, they would go along with it. So all the currencies uh, would devalue versus gold. And that's the way I see it. Um, because if only the US did it, then yes, we could have hyperinflation in the US. But yeah, it's a
I think they're going to do it slowly, little by, they I think the gold price is now freed from the government controls. It's now finding its own level. It won't get there immediately. We're not going to go from 3,000, or we're 2,700 now. We're not going to go from 2,700 to 30,000 in a week or a month. It's going to be a gradual, slow process over the next few years, I believe.
And I think Donald Trump has said something about wanting to obliterate the debt. So I think what that will do, it will obliterate the debt. And not just for the US, for the whole world. And that's why you shouldn't have any government bonds. You should get it's going to be they're not going to like be doing things to make it's going to be very disruptive. So yeah, I think we will.
Can't pay, won't pay.
Yeah. So yeah, that's another reason, Chris, to have gold and try to avoid fiat currency as much as possible. Of course, you still have to have some to operate, but the purchasing power is going to go down sharply. And I think, like Clive said, it's probably going to take 3 years, maybe four. But like if you said to someone in 1971, oh, gold is going to 900 almost from 35, it's the similar kind of move, I guess. Uh, so yeah, things will get more expensive in dollars because the dollar and the pound and the euro, they're all gonna die in terms of.
Well, they'll get cheaper in gold terms, Mario.
Oh yeah, that's right. That's right. Clifton Moberg, thank you for your super chat. If price of gold explodes higher, no one will wear wedding band of gold for fear. Uh,
Depends where you live.
yeah, it depends where you live. Yeah,
I think if you're in Dubai, you'll probably still keep wearing it, and if you live in Switzerland, you probably will.
yeah.
But there are some countries where you probably won't want to have too much on your fingers.
I've got a white 18 karat white gold wedding ring. I mean, I think it's worth about 200, 300 pounds. If gold goes up 10 times, yeah, it will be expensive, 2,000, 3,000 pounds, but the pound won't be worth as much. That's how it will work, I think. You won't be able to, but I think gold is going to do its job, though, you know? The
Funny thing, it was about 5 or 6 years ago. My wife bought me a wedding band in the UK, and we were in the shop looking at this, and we chose the one, and the price I think it was about 400 something pounds, £450, and I said to my wife something along the lines of, "You do realise the gold in this is only worth about £70." And I wasn't like criticizing the shop. The shopkeeper got really upset.
Yeah.
He said, "Oh, but we got to pay the rent, we've got to pay the salaries, we've got the VAT, we've got this, that, the other, and then there's the markup, and then there's all the workmanship which has gone into it." I said, "No, I wasn't criticizing. I'm just making an observation
It's
that
huge markup, the jewelry. Maybe in China, I don't think in China is as much. Uh,
actually, I can tell you it's quite interesting the way it works in China. Very different from the UK, and I don't know about America, but in China, if you go into a jewelry shop where they sell gold, a lot of the gold is bullion-like anyway. But if you go into one of these shops, they have on the wall the gold price, and it's in renminbi per gram. And that's often a price which is changing all the time, or it can be a posted price, but it's changing. And when you see an item, it's got two bits of information. It's got the weight in gold, so you take the weight in gold, multiply it by the gold price on the wall,
mm,
plus they've got the labor charge.
yeah.
So take the weight of gold, multiply the price on the wall. Now you've got the value of the gold. Then you add the labor charge
Yeah.
and maybe tax as well. What that means is you know exactly what the value of the gold is in the item you're buying and how much of it is labor charge. What that means is if you want to sell the item back, you won't get the labor charge back. You'll just get the price on the wall for the gold price.
Yeah, I saw a comment from Eric Young, King Kong on Twitter. I've interviewed him. He's based in Hong Kong, but he traveled to China from Hong Kong the other day to Shenzhen. I think that's how you pronounce it. And he went to a jewelry store, and what they do there, Clive, is for $1.50, you can give them your jewelry, and they will tell you the purity, gold purity. They'll tell you the weight, and they'll give you a certificate of authenticity. I think that's really good. Um, just goes to
Sh-
show
sh-
how the Chinese look at gold. They look at it as not just jewelry, but also money.
I was in Shenzhen. This is a long, long time ago, and it's actually a giant. They have or part of Shenzhen is like a giant electronics center. It's like as big as a small city, just electronics, electronics, electronics. And I was in one of these multi-story shops where there was a shop selling luxury Swiss watches, all fakes, of course. So I said, I was looking through the glass case at these Swiss watches, and the owner of the shop came up to me and said, "Very good on there." I said, "Yeah, but they're all fakes, aren't they?" He said, "Yes, they're fakes, but you can't tell the difference." I said, "Well, I'm not an expert." He said, "No, no, look." And then he showed me the watch on his wrist. He said, "That's a genuine Rolex, and those are the fakes. Can you tell the difference?" I said, "No, your
Yeah.
genuine Rolex looks just like the fake
Well,
Rolexes."
you gotta like I bet you the weight is different, but we got super chat. Thank you, uh Claude Fillon, Canadian. Why do central banks borrow the money they cause the central banks to print? Why don't they simply print? Yes, they would cause inflation, but at least they would avoid the loan. Well, I'll answer this first, Clive. Central banks do not borrow the money that they print. They just create, technically, it's called reserves. They create it out of thin air, clothes. And what they do with it is you know, Jay Powell will type $50 billion on his account, and then the Fed will go and buy $50 billion of bonds from the primary dealers on Wall Street who've bought 50 billion from the Treasury. So yeah, they don't central banks don't have to lend money to themselves. They just create it out of thin air. And that's why those charts I showed earlier, Clive, that's why the currencies are sinking so much, because I think since 2008, they've created something like over $20 trillion of basically current reserves out of thin air. So, do you want to answer that question?
I, I think one thing that a lot of people don't absolutely get is that in every country, America, Britain, Europe, there are two sides to the equation. There's the treasury, which is part of the government, and the treasury is what spends your money. It's what they collect your taxes and they spend it, and they have to spend the extra because they're running a deficit. They're spending more than they are collecting in taxes. So that's the treasury, which is part of the government. And then you have the central bank. And a lot of people think it's part of the same thing, but they are actually two different institutions. Now, the central bank is the part which lends the money that you and I can't afford to lend to the government. So when the government's borrowed as much as it can from you or I without pushing up the rates, then the central bank steps in. And as you say, they buy them from the primary dealers, but short-circuiting that, they're effectively buying it from the government itself. So what the central bank does is electronically prints money. In other words, it's creating money out of thin air and it's buying the bonds. Now, that used to be a really great business for the central banks because it cost them nothing to print the money and they were buying bonds paying, at the time, 2%. And that was a really great business because, if you issue $1 billion or you buy $1 billion of bonds with money you've just printed, the money you printed costs you nothing, but those $1 billion of bonds are paying you 2%. So you're now earning 20 million, is it? It's 2% of a billion, 200 million. 20, you're earning 20 million on that
Yeah. So
out of thin air.
yeah, there are some people out there like, and I'm not going to name names that say that central banks don't print money or create money out of thin air, that they borrow it, but they don't. And William Patterson, one of the founders of the Bank of England, he said the following, Clive, the bank hath benefit of interest on all monies which it creates out of nothing. So there you go. Central banks don't, yeah, they don't have to borrow money. Central banks, they are the engine of this fake, and it's not even money, it's like fiat currency. And Even private banks or commercial banks, they create currency out of thin air as well, Clive. It's not just the central banks. When they lend you 10,000 pounds, for example, to buy a car, they credit your account with 10,000 pounds. So they create that out of thin air as well.
Yeah, and then I give it to the car dealer who puts it in the bank and they lend it out again.
Yeah, many times over. Uh, Blair Johnson, thank you for your super chat. He says Robert Kiyosaki selling all gold for Bitcoin. Thoughts? I'd be doing the opposite if I had Bitcoin. Clive?
Um, I've read Kiyosaki's book. I can't remember what it's called now. Um, at the time it was all about property. So and I didn't know he'd got into gold. So he's been shifting around a bit. Should he be going to Bitcoin? I think it's crazy to put all your money in Bitcoin. I find there's nothing wrong with having something in Bitcoin. I mean, if you have 5%, it's top end, I would say. Um, and it might do very well. It might well. I mean, there's a good chance it'll do very well, but you don't know.
Hmm.
You could be far more if you have, as far as gold is concerned, it's been around for thousands of years and highly recognized, and more importantly, recognized by the central banks of the entire world who are buying it today. So, in terms of relative safety, gold may not perform as well, but it's a much safer asset.
Yeah, and I agree. Someone's asking here, Bo Diddley, why don't governments print their own money instead of issuing central bank fiat currency? Well, yes, there is a lot of people who talk about that, and I mean, there was a time, I think it was Civil War, the greenbacks were just printed out of thin air by the U.S. government during the Civil War, the Continentals as well. Well, actually, the Continentals during Revolutionary War, they're supposed to be backed by silver dollars. And then during World War One, the UK Treasury issued the Bradbury pounds. But the thing is, money is not something that government can create out of thin air either, just like central banks can't. I look at money, Clive, as the most marketable commodity. It has to have some value. And over the millennia, the market has decided that it's many different things, but it's settled on gold and silver. And it could be Bitcoin as well. I'm not discounting it. It could be anything. But I guess the only advantage of politicians actually issuing this currency, uh, just a paper. It's not even a promissory note, and today's money or paper is not promissory notes either because there's nothing behind it. Would you really trust the governments to do a really good job managing the currency or the money? I wouldn't. I think it's a job for the free market, and the free market has to decide what money is and what the interest rate should be. So I don't think it will work. The only advantage is that you wouldn't have debt, a government debt. You wouldn't, because the government wouldn't have to borrow from the central bank and the bankers.
Here's the thing: unless the government defaults, there will never be any less money because they're always going to be spending more than they could collect in taxes. And to all intents and purposes, Doesn't matter whether they borrow it or print it, but to all intents and purposes, they're creating extra wealth or extra money. So the amount of money on the planet is only going to go up and up forever and a day. And what that means, if the amount of money is going up, the value of the money is going down. So
Yeah.
those who are saving for the long term, if you have a long time to your retirement and you're saving your retirement savings in money terms, it's going to buy you an awful lot less by the time you retire. Now, if you need it to buy a house and you might buy the house next year, well, fair enough. You've got to keep it in cash because you need it handy. But as a long-term savings device, fiat currency, you're on a hiding to nothing. It's going backwards.
Yeah, Clive, I think I spoke uh, about this book on Friday when we had our chat, uh, De Moneta. It's about this 14th century philosopher about money. And I got this sent by someone in Canada. And we got Rudy here, by the way. Someone wanted to see Rudy. His name
Uh,
his name is Ed Larkham. Thank you, Ed, again. And he wrote me a nice letter, which is unusual these days to get a letter. But this is what this guy here, Nicholas Orez, said about money, Clive. Um, let's see. What did he say? Oh, here we go. Although it is the duty of the prince to put his stamp on the money, for the common good. He's not the lord or the owner of the money, current in his principality. So what I'm trying to say here, government doesn't create money out of thin air. The purpose of government, in terms of vis-a-vis money, is to make sure that the gold and silver are real and they've got the standard and they put their stamp on it because the prince or the monarch has the credibility. So for the government to create a piece of paper saying that it's money, it's completely, I think it's completely wrong and it's not right. What do you think?
well, I agree with you totally, Mario. Absolutely, 100%. I,
Okay.
I was, I was, I was smiling a little bit when you were saying all that because I was looking at somebody who wrote a question about Bitcoin. He said, how do something along the lines of, how do I trade my Bitcoin if the power goes out? Well, I can answer that. You get in your Tesla, you drive down to the supermarket, go through the self-opening doors and go to the cash machine and put your card in, type your code, and then out comes some cash. Done. That's what we do when the power goes out, right?
Yeah, well, I think you're being sarcastic a bit.
Of course, yes. I mean,
Yeah,
that's the joke. I mean, of course, many people say Bitcoin's never. I mean, whether Bitcoin survives or not is another question. But many people say that it won't work if the electricity goes off. But of course, if the electricity goes off, a lot of things are not going to work.
yeah. Tiffany, thank you for your super chat. What about miners? If gold becomes unobtainium, will people pile into miners? I'll let you answer that first, Clive.
Well, first of all, gold is always going to be obtainable. It's just how much you're going to have to pay for it. And of course, you may face periods when you go down to the shop to get some, and the dealer says, "Sorry, I sold it all." But probably as his shelves start to empty, he's going to start putting the price up. But yes, people will definitely go into miners, because the miners have got the gold, even if it's under the ground. They're going to dig it up, and sooner or
Yeah.
later, they're going to dig it up. They'll pay you dividends, and you can use those dividends to buy the gold.
Yeah, Tiffany, I agree with Clive, and I would say you have to differentiate between different kinds of miners. There's the junior exploration, which is very speculative. They're still drilling to try to find gold to sell it to the big producers. But the big producers, they're going to do really well because a lot of people that are not really into stacking or it's a big investment fund, for them it's easier, much easier just to buy the miner instead of buying physical. So I think they will do well as well, the miners. It's another super chat from Frank Cavigia. He says, I bought 50 ounces of Canadian silver maples. Wonder what the US price will be in the next few weeks. Yeah, it might be a lot higher because they're going to put tariffs on Canadian silver, but I personally wouldn't be doing the trade just to make the profit because that's not the purpose, in my opinion, of holding silver. What do you say, Clive?
Well, if you want to get some, get them now. That's
Yeah.
the message before the tariffs come.
Yeah.
Um,
And the thing is, I think it's already probably priced in now. If you hadn't done it before, let's say yesterday, and I think yeah. So you might find that you won't really make that much of a profit because the markets are always quite ahead of things.
I
Uh,
mean, if you hold on to the silver long enough, it's going to go up because there's a shortage between the amount of silver being mined and the amount being consumed for industrial use, i.e., industrial use, including things like jewelry, exceeds the amount of silver coming out of the mines. And for many, many years, we've had the mined production dropping, and the present forecasts are for barely any change in mine production in the future. So, but demand is going up mainly due to electronics use. So, I think in that environment, we'll have larger and larger shortages of silver, and that has to push the price higher to suck out the recycling of silver.
yeah, someone's asking a question here. Alex, Mario or Clive, any thoughts on Triffin's paradox in the current situation in the US? Yeah, I'll answer that first. Yeah, Triffin was an economist. I think he was Belgian in the 60s. And he said the Bretton Woods system, where the dollar was at the center and was backed by gold, and all the other currencies were backed by the dollar, it would lead to where we are now, where the US has to run a huge current account deficit because countries try to sell as much to the US as possible. And that's the bad thing about having like the Bretton Woods system, which wasn't really a pure gold standard. It was a dollar standard. It was a gold exchange standard. And I think it's one of the reasons why Marco Rubio has come out and said we can't be the sole world power. We have to have a multipolar world. And I think in the multipolar world where gold is the monetary asset, I don't think we're going to have a Triffin's paradox. Uh, have you heard of Triffin, Clive?
I did at one point in ancient history, but we basically, I think we've had the Triffin's paradox. What's that about? It's basically about the world, the US dollar being a reserve currency. The world needs a reserve currency. So what has to happen, or not in the future, but what did have to happen when they started the dollar as a reserve currency after 1944, they had to run deficits with the rest of the world to supply the world with the dollars they needed to trade. So that happened. But of course, the paradox here is running excessive deficits can lead to uncertainty and instability and loss of trust in the currency. And we're finally reaching that point now. And so where do we get to? Countries start to seek alternatives.
Yeah. Someone said here, well, we've gone over the time limit, but let's continue a little bit if it's okay with you, Clive.
Sure.
Mr. Verdi's 2022, the gold crowd is clinging onto hegemony. It's a heavy yellow rock used in electronics, which does give it value. Well, you can have your opinion on gold. I would still say that it holds its value. It's been around for thousands of years, and I think it will continue to be. But the people like me and Clive, who are you want to call us gold bugs, the other thing we believe in, at least me, is that the market for money should be a free market. So, yeah, if you find something better. I don't mind. I will switch to that, but for now, I still believe gold is, and silver as well, to some extent, is the best kind of monetary asset. And even after Nixon closed the gold window, most people, even I think, Clive, I think it was uh, what's his name? Forgot his name now, the famous economist, Milton Friedman, he even said that gold was going to go to zero because people wouldn't need it. But he didn't know that gold was a reserve asset. how gold is important. So despite that, gold has continued to be be a thorn in the side of the bankers, and it still is.
I mean, look, gold is a universal asset. Everybody wants it if they can get their hands on it. I mean, you even if you go to Paris, you'll even see these scammers where they pretend to have found a gold ring in the street and then try to give it to you. And of course, they fool a lot of people because they're greedy and think it's real gold, and they'll take it. And then, of course, the trick starts. But ever since the beginning of time, gold has been wanted by everybody in the world. I mean, you only have to read to know that. Get a book of fairy story, what they call children's nursery stories, like for example by Hans Christian Andersen, and literally every story or every other story it's either a poor girl marrying a prince, or it's finding a pot of gold at the end of the rainbow somehow. And all these stories, are filled with gold. Jack and the Beanstalk would be an example. He climbs up the beanstalk and steals the gold of the giant.
Hmm. So we got a super chat which I missed. Paul Sagbacken, Swedish crowns. He says, just finished reading Our Crowd. Thank you for the recommendation. Yeah, that's a good book. Let's see, any more questions? Oh yeah, Robert Mullings, Sovereigns or Britannia, which one is better? I think both are good. I mean, yeah, I think if you I mean, sovereigns are about a quarter of an ounce, just under a quarter of an ounce, and Britannias are 1 ounce gold coins. I think both are fine, and both are capital gains tax free. Sovereigns are more portable, I would say, easier to carry around. And the thing about sovereigns, they're like 22 carats, so they're not like 999 like Britannias, so they don't damage as much as Britannias. So even though I have both, I prefer sovereigns. And uh, what about you, Clive?
Well, obviously, sovereigns have got the advantage that they historically they were the coin to have all around, everywhere in the world. Everyone knew what a sovereign was, and everyone would take the sovereigns. If you read the James Bond books, what did he carry around with him? He carried hidden in his belt some sovereigns to bribe the foreign officials or buy his way out of a death sentence or whatever. Um, and of course, the other thing about sovereigns is they're small coins, so they're more divisible. And if you get into a real crisis situation, it'll be easier to handle the small coins than the large ones. But personally, I prefer the Britannias because they're 1 ounce, and that's a more universal weight, and everybody on the planet knows what an ounce is. They don't know how much gold is in a sovereign. You've got to do a bit of maths to work that one out exactly. But if I go somewhere on the planet today, people don't know sovereigns so well. I think they'd recognize an ounce of gold, like a Britannia, far more easily than they'd recognize a sovereign today.
Jack B says gold eagles are best for Americans. Yeah, I mean that's a bullion coin, but the other coins I like is the pre 1934 or 33 gold coins. So I have here, Clive, $5 gold. Yeah.
What's that? Half a crown? No, what do they call it? Half an eagle?
No, it's yeah, half an eagle, yeah, $5. An eagle is $10. And I have a Victoria Sovereign, and they're very similar in weight. And that's why the exchange rate used to be 1 pound used to be $4.88. You can see why. It's all to do with
Hmm.
gold. People don't understand why gold is so important. Even today's exchange rates are all derived from the weight of the coins. Yeah. So yeah, I think the bullion 1 ounce gold eagles are good, but also the pre 33, you get the double eagle, which is $20, and that's just under an ounce. I think that's 0.9675. So this would be 0.9675 divided by well, that's a quarter of 20. And Clive, I've got one here too. This is a bit older. It's 40 francs from uh,
Oh,
18.
that'd be a Napoleon, right?
Yeah, look at that. Good old Napoleon.
Oh,
That's
that
about That's
Lovely.
about uh, well, 20 francs is 0.1867 of an ounce. So this is like about 0.37 of an ounce. So yeah, there you
And
go.
what's a French franc worth today, Mario?
Uh, I guess you'd have to look at the euro exchange, wouldn't you?
Effectively, it's zero. So
Yeah, I know. But yeah, but 40 gold francs still worth quite a bit.
Absolutely, absolutely. I remember when I was in San Moritz, it was about a year ago. I went into a second-hand shop. They're selling second-hand handbags and coats and things like that, luxury items. And I said to the lady, "Have you got any gold coins?" And she said, "No, but try the watch shop next door." And I knocked on the door of the watch shop, and the guy said, "Well, yeah, I do have 12 double eagles." And I said, "Well, how much do you want for them?" He said, "Well, I'll sell you one or two for 2,000 francs each." Or he said, "I sell you one for 2,000 francs each." And so I said, "I'll take two." He looked a bit grumpy and wasn't really willing to sell, but I bought two. And then I phoned a friend and said I'd got these, and he said, "Well, can you get me one too?" So I went back to the shop next day, and the guy really put up a fuss. He didn't want to sell me the third one, but 2,000 francs each. Well, of course, they're worth 2,500 francs each now, and less than a year's gone by.
Yeah. Someone's asking here, Endurorama, Mario, what do you think of gold backs? I think they're interesting and they're okay. I mean, they're these banknotes that have gold in them, of micro amounts of gold. And I've seen that Donald Trump is issuing the gold notes, Aurum. And yeah, so that's an interesting, I think it's 100 milligrams each of the Trump note, 100 milligrams of gold. And Durama, I don't know if you where you are, but Miles Franklin, Andy Scheckman, I was there with him a few weeks ago in Florida, and they're starting to sell gold backs. So if any of you guys are interested in gold backs, you can go to Miles Franklin, and I have a link and all the details how to get in touch with Miles Franklin in the description of this video.
What's the face value of those gold backed or gold
Well, it depends
filled notes?
how much gold they put in it, right?
Okay.
100 milligrams, it's you have to work it
Yeah,
out.
it'd be about $7.
Yeah, that's right. And they have some that have more gold. It depends. So you can pay with that actually, if you know the value. Uh, Guy Shosensky, sovereign contains 0.2354. Yeah, we know that. 0.2354. Yeah, there's some numbers in gold that everyone should know. Maybe not Americans, but yes, sovereign is 0.2354. The troy ounce is 31.1035. I think those are, and let's see, 1 kilo is 32.15 troy ounces as well. So those are important numbers. If you know those numbers, you'll be okay. Uh, Adam Montague, did you beat Andy in golf? Well, the first day he played against some other guys. They had their own game, so I didn't play that. But the second day, I played with him, and against two other guys, and they beat us, unfortunately. So there you go.
And troy ounce is different from an ordinary ounce.
Yeah, one ordinary ounce is 28 grams, and the troy ounce is 31.1035. Okay, Clive, I think we've we've been here long enough. So I'm gonna thank you for being on. It was enjoyable. And I see, Clive, that we got 3,200 uh, viewers right now, which is a record, I think, for my channel. So that's pretty good.
People love you, Mario.
They love you too, Clive. So yeah, thanks everyone, and let's see what gold does in about, well, just over an hour and 45 minutes. And I wish you all a great week, and you as well, Clive.
Thank you, and bye bye to all your viewers and thumbs up.
Thank you. Thank you, everyone. Bye bye. Okay.
I'm just
Yeah.
doing the thumbs up on the video now. There we
Yeah.
go.